The coronavirus seems to be spreading more rapidly in other countries, while in China it seems to have been contained lately. So this has led to a wild gyration in global stock markets. In fact, a lot of global stock markets corrected and seems to have stabilized now. In India too, we have seen that the markets corrected by about 10% from its peak and is now kind of stabilizing. So is the worst over for the markets? Hello and welcome to the Mint Mark to Market show. I am Clifford Alvarez and I will take you through the markets and what has been happening in the markets right now. Going by past epidemics, we have seen that markets usually have tended to recover in about 3 to 6 months. But in India, things are compounded by the fact that the economy is going through a slowdown. We have seen a 4.7% GDP print for the third quarter, which is slightly slow. So this is also impacting the earnings growth of Indian companies. In fact, the earnings growth for FY20 is expected to be about 10%. Now, the good thing is that the correction in the stock market has brought valuations down to reasonable levels. From an earlier high of about 19-20 times FY21 earnings, the valuations now has come down to about 17-18 times FY21 earnings. We could see some fluctuations in the market, particularly around the coronavirus, which seems to be spreading in India a bit right now. However, analysts are saying that at around 10,500 and 11,000 levels, the market should take some support, which is a good thing. Globally also, we could see some choppiness in the markets as passive funds, particularly exchange traded funds, are pulling out from Indian markets and emerging markets as well. However, the choppiness has also reduced in the last couple of days, which is a good sign. One of the ways in which governments and policymakers across the world are fighting the coronavirus is through monetary policy. Liquidity is being increased. The US Fed just recently cut rates by 50 basis points. This was followed by the Canadian Central Bank also easing rates by about 50 basis points. Other central banks across the world are also expected to cut interest rates in the next coming weeks. In fact, there is high hopes that the Reserve Bank of India will also cut interest rates, and this will help boost sentiments. One of the good things about interest rate cuts is that it boosts liquidity in the global market. Anyway, there is abundant liquidity in the global market, and experts feel that some of this additional cutting would see its way into the equity markets. Analysts are expecting a better second half because of the lower base that was made last year. Also, the gradual pickup in economic activity is going to lend support to earnings growth. Some sectors like consumers are on the higher valuation side, while others like metals and pharma may look relatively inexpensive. But because a wide segment of the market didn't perform in the last 2 years, as well as due to the correction right now, it looks relatively much better in valuations than earlier. We have seen a slight uptick in the markets today, but that does not mean that volatility is out of the way. Coronavirus could still dominate the headlines for some time, and that would keep volatility high. However, a good thing is that much of the markets has corrected in the recent past due to the heavy selling. So that should keep some pressure off the market and lend support at lower levels. Besides, mutual funds are seeing good inflows, particularly into mid and small cap stocks. So that also will lend support to the markets. That's all from me for now. Thank you for watching.